Today we're speaking to Mercia Asset Management, which is a regionally focused specialist asset manager. Its stated intent is to become the leading regional provider of supportive balance sheet, venture, private equity and debt capital in all transaction sizes, typically below 10 million. Today we're focusing specifically on the life sciences part of the business. And Mark, Chief Executive, perhaps you could start with introducing Mercia's life science operations and describe how you work.
Thank you and welcome. So today I'm joined by Mark Wyatt and Peter Dines, and the three of us form a central part of the life science operation within Mercia. Mark has got an exemplary track record in terms of backing not just young, but also scale-up businesses through to IPOs and exits. And Peter, again, a fabulous track record in terms of he was a business owner within this sector ahead of joining Mercia, and again has an exemplary track record, not just with young businesses, but scale-up businesses and taking those through to exit too. And Peter will talk a little bit more about that later on. And as a manager, we've invested in life sciences now for over 15 years, actually, which is reflective both of our regional presence. So there's some strong opportunities within the regions, typically outside of London, and that's a reflection of that, but also of our connections to regional universities that have historically been very, very good sources of deal flow for us. And that connected piece is really, really important, and something that we're very proud of really differentiating ourselves, which is that we have this thing called connected capital. So we've got about 800 million in terms of assets under management, approximately 300 million of free cash to invest in businesses, but through a suite of funds that overlap and connect with each other, which means that we can put in place the right form of capital at the right time for managers, for owners, as they seek to develop these businesses and move them forward without having to think about where their next source of capital is. We do that part for them. And that's meant that we've had the great privilege, actually, of backing serial founders, serial entrepreneurs. A good example there is a business called Cioxis, which was originally based on University of Birmingham technology. And we took that through and scaled that business. And the founder in that was also the co-founder in Native Ancient Company. And you'll hear a little bit more about that in a moment. And indeed in Oxgene as well. And again, you'll hear a little bit more about that. And that's a good example of businesses that took funds through our third-party funds before our proprietary capital, our balance sheet investment, took over and scaled those businesses going forwards. So hopefully that gives an overview of what we're trying to do, what we're succeeding in doing. We see over 3,000 inquiries for investment every year, and we have a portfolio of something like 400 companies across the group. So we are now one of, if not the most active investors in the regions as we develop and scale this model further ourselves.
Perfect, thank you. And perhaps a question for you, Mark Wyatt. Mercia's got a very broad reach across the UK. Can you discuss how that helps you identify the best investment opportunities within the life sciences sector?
So the first thing to say, I think, is that it's our focus drives the identification of the best opportunities for us. We're interested in backing great businesses, and we don't see any compromise on quality in terms of what we're looking for just because our focus is in the regions. We don't invest in a business just because it's regionally good. We're looking to invest in it because we believe it's just a good business. And given our focus on the regions, I think it's about looking for deals that others might not find. And we do that because of the specific mandates we have, but also the infrastructure that the business has put in place. So we have offices in all the areas that we're looking to be active in, and that physical presence embeds us in that ecosystem that's important to us. And I think that helps us to build long-term relationships with the communities that are important to us. I think this dovetails nicely as well in terms of the life science sector into the fact that a lot of the UK businesses in that sector are actually based in the regions. They're not all based in London, where a large concentration of the capital is. And so our focus on regional investing and the life science sector, they're happy bedfellows. In terms of that, we've found, businesses that cover the range of our interests, from young innovative businesses like Innovus, based in the northwest of England, who are developing augmented reality surgical training tools, through to rapidly scaling businesses like Abingdon, which is a diagnostics company based just outside of York on the Sandhutton Biotech campus, and also with a second site in Doncaster. So we're able to find these businesses that are developing products that have relevant global markets and a real ability to scale. In terms of how we do that, I mean, as Mark's already alluded to, we've spent time building close relationships with 19 university partners in the regions, and they are a genuine source of not just expertise to us, but real deal flow. And we've created and invested in businesses like Locate Bio from the university network. And then the other thing, I guess, in terms of the breadth of reach that we have that really helps us is we've got a long established network of non-exec directors, and they're obviously a good source of potential deal flow for us. I mean, many of the people who work in Mercia, whilst we don't necessarily actively investing in life science businesses in London, we have lived and worked there, as well as Cambridge and Oxford. Some of us still live in those regions. So those networks aren't closed to us, and the people within there often have other opportunities that they can bring to us within our areas of interest. So I think it's that embeddedness in the geography that we're interested in that really gives us a differentiated position.
When you're looking for opportunities to invest, how do you actually go about identifying those opportunities which you will focus on in terms of doing due diligence?
First off, it's having a clear idea as to what is and isn't of interest to us. So we will invest in early stage startups right through to scale up opportunities, but often we'll do it in slightly unloved sectors where maybe there isn't as much competition for deals. So examples of that would be things like diagnostics, biomanufacturing, tools companies, where some of the larger dedicated life science funds wouldn't necessarily deploy capital. But for us, they're interesting areas where they meet one of our other criteria, which is we're not looking to support businesses that require hundreds of millions in terms of capital to finance and grow. We're probably looking for businesses that require no more than 20 million in total. So they're the sorts of opportunities that would pique our interest if they come through the door. In terms of how we go about further identifying the ones that are of interest to us, I guess the tools that are available to us are much the same as any other investor. But I guess it comes down to, again, experience and expertise. The broad criteria above helps us do that initial sounding, but then we would leverage our specific in-house and external resources. So internally, Mercia has the resource and is invested in research tools and building a team that has decades of experience. So we've got an ability to do this properly. And hopefully that's one of the reasons why some of the companies that we've invested in have specifically sought us out or have actually chosen us as an investment partner. For me, it's a two-way process, and we really enjoy building a relationship with the management teams. So being present on their patch and being able to spend time with them, even in the COVID environment, we can do it via Zoom. We've found that that's a key part of the process for us. Also, what I would say is life science is a very broad sector, so it's very difficult to retain all the necessary skills in-house to assess the merits of all the different businesses that we see. But we've been doing this for a long time. As Mark said, we've got over 15 years of experience and exposure to this sector. And in that time, we've built up a great network of many experienced non-exec directors, companies that are actively at the cutting edge of their specific areas. So there's plenty of friends of the house that we can ask for an opinion or referrals to expert consultants for a specific bit of diligence. And that's how we really get to the answers that we need when we're assessing an opportunity.
Thank you. And then perhaps turning to you, Peter, can you talk through Mercia's track record in life sciences and what sort of return do you expect from these investments? How long will investors have to wait to see some tangible returns, and Are there any potential? Is there any potential in there for 10 times plus investments in the portfolio?
Sure, absolutely. So as Mark mentioned earlier on, Mercia's got a whole suite of overlapping funds that backs businesses from early stage to scale up. So the time frame will depend slightly depending on which funds are investing at what stage. But probably a very good example is the native antigen company. So this was originally a University of Birmingham spin-out that received early seed investment from our managed funds. And then scale-up capital from our proprietary balance sheet capital. And during lockdown, actually from start to finish, we ran a process to exit that business and successfully sold it to LGC. And that provided a 12x multiple for our early funds and up to 8x for our balance sheet funds along the period of between 9 and 5 years. So 9 years for our early funds and 5 years for our balance sheet. And another good example would be Optibiotics. So that company we backed right from the very beginning through to IPO, and again that's provided an 8x return to our investors.
So turning towards COVID-19, can you just discuss the impact that has had, one, on your investment portfolio, and secondly the rate of your investment activity?
Yeah, so for the life science portfolio, it's been broadly positive. So we have a number of diagnostic businesses in our portfolio that are now very much focused on COVID. A few of them we've mentioned earlier, so Abingdon, MIPS Diagnostics, and also Sense Biodetection. So all of those businesses are now turned to the fight against COVID and providing solutions and also gaining quite a bit of investor appetite from other investors as well. So overall, it's been positive actually for the life science portfolio, and just really supports the investment decisions we made earlier on around these types of businesses.
Thanks. And then in terms of analysing new investment opportunities for investment, are you looking specifically at COVID-19 as an investment theme, or are you looking beyond that really?
I think we're looking beyond it. I think we've got a number of portfolio businesses that are well placed, but also we're then also looking at the other opportunities that once the world gets back to a new normal, there's a whole suite of interesting technologies that we have in the portfolio, and we're looking to scale.
And then back to you, Mark Payton. Can you discuss what it means for Mercia if a vaccine is developed, and do you think life sciences will remain a core part of your investment strategy?
Yeah, I think that's approximately a third of our portfolio, life sciences actually, and maybe slightly over a third of software related. So they are two sectors that quite dominate our investment philosophy here at Mercia. And and I think it's just also important just noting that the sorts of businesses that we invest in have quite modest capital needs. Rarely do they need more than 20 million in total investment. So it means that we can, back to that connected capital, really support them in a major way through their entire journey. And what that's meant is that historically our focus has been in diagnostics, it's been in med tech, it's been in sort of biomanufacturing and production facility improvements, etc., which of course have all come through. And just to, it's worth just sort of stepping back. So in the last 20 years, you could on one hand count the amount of new vaccines that have been approved. Okay, so it's 2 or 3. It's just remarkable. And at the moment, I think there's something like 40 vaccines in clinical development for COVID alone. So 40, of which I think 6 of them are in phase 3. And there's about 100 more in preclinical development. And they are almost all based on novel technologies. And indeed, those ones in phase 3 trials, 5 of those 6 are based on novel recombinant technologies that don't exist at the moment. So there are, these are recombinant viruses, recombinant RNA or DNA vaccines, all brand new. And they all require novel manufacturing processes, etc. And they all require new diagnostics to see how efficacious those are, and actually to sort of diagnose people who may or may not have the indication of the disease in the first place, the infection in the first place. And that has absolutely thrown it open for Mercia, because we have an array of diagnostic businesses. Mark mentioned Abingdon Health. We've got Sense biodetection. We've heard about Nature Management Company, which of course was in the diagnostic industry as well. So we have a huge array of those businesses that COVID is just part of their arsenal. Oxygene is a business that is working in terms of manufacturing, biomanufacturing, and will be fundamental to assisting many of the players as they bring that through. And our expectation is there will not be one vaccine that comes through, but there will be several vaccines, and probably new vaccines improving over time as well. And that will set the scene for new vaccines for other indications, for other diseases, infectious diseases going forwards. So I think what this has done, this current environment, is accelerated research and development and understanding in vaccines, but also the industries and supply chains that wrap around those. So I think for us, for our life science focus, for existing portfolio and new portfolio companies, this has really accelerated opportunities in quite a new generation. It sort of reminds me of when you had therapeutic antibodies, when they were an interesting idea, then the first one came through, then you had recombinant therapeutic antibodies. Now everybody knows about therapeutic antibodies. Now you've got novel vaccines that are recombinant vaccines in development, and very, very soon, my expectation is most vaccines being developed in the future will be recombinant vaccines. So I think the question isn't really what about will a vaccine come through? It's actually there will be a vaccine come through. Technology will come through and deliver that. But for us as an investor in the life sciences space, it's much more about what does this open up in terms of investment prospects and exciting new technologies coming through that we can support and back.
Very interesting. Mark, Peter, thanks very much for your time.